Do you know what is the difference between stocks, share, and equity?
Welcome back to the deep dive. We're here to cut through the noise, get straight to the insights you need. In finance, there are these words that just get tossed around constantly: stock, shares, equity. You hear them everywhere. Someone's talking about their stock portfolio, then it's owning shares in some hot company, then suddenly it's all about equity. And, well, it's easy to just kind of nod along, isn't it? Secretly wondering, wait, are these really all the same thing? So today, that's our mission. We want to peel back those layers, cut through the jargon. Our goal is to give you really clear, precise information so you feel confident, you feel in control, not just, lost in terminology. By the end of this deep dive, I really hope you'll not just know the definitions, but truly get why these little differences actually matter.
Absolutely. And it's true. They are super common terms. And yes, often used interchangeably, maybe a bit too loosely in casual chat. But getting the nuances right, that's fundamental. It really is. It's not just about sounding smart, though that's nice too. It's about actually understanding financial news, company reports, interpreting investment opportunities with, genuine clarity. And that precision, that's what we're aiming for today.
Great. So let's dive right in where I think most of the confusion starts. Those two terms, shares and stock, they seem so similar. And our sources confirm, they often do mean the same thing, like a single unit of ownership in a company. But there is a subtle difference, isn't there? What really sets them apart?
There definitely is. And it often boils down to context, specificity, really. Shares is generally the word you reach for when you're talking about a specific number of ownership units in one specific company. Think precise, countable. Like the example, I own 100 shares of Microsoft.
Yeah.
Not 100 stock.
Yeah.
So it pins down the exact quantity in the specific company involved. It's about being exact.
Okay, so context and being specific. Shares means you're counting units in one place, like saying, I have 5 apples. Crystal clear. Very precise.
Exactly that. Specificity is the key word for shares. Geek. Now, stock is broader. It's a more flexible term. It can refer to the shares of just one company, sure, just like shares can. But, and this is crucial, it also often refers to a collection of shares across different companies. That's where its versatility really shows. So you might hear, I've got a diverse portfolio of tech stocks, plural, implying holdings in, several different tech firms. Or maybe I'm looking into growth stocks. That's a category, right? Not just one single business.
Right, okay, so shares are the individual units. Got it. And stock could mean those same units, or it could mean like a whole basket of them from different places, like that analogy. If shares are the individual apples, then stock could be apple stock, meaning just apples. Or it could be the whole fruit stock, apples, oranges, the lot. Is that a fair way to think about it? Where stock has that potentially wider, more collective meaning.
That's a perfect analogy, actually.
Yeah.
It captures the scope difference really well. You basically hit on why we even have these two different words. Shares gives you that fine-grained detail, the exact count in one specific firm, like counting those apples. Stock lets you talk more generally about ownership units, whether it's just one type or a whole collection across different companies. It's just a convenient shorthand for talking about overall holdings, or maybe a whole category of investments. It's interesting how language works there. It depends if you need specifics or the big picture.
That makes a lot of sense. It really is about the level of detail needed for the conversation. And speaking of the big picture, now that we've sort of separated shares and stock, we can zoom out even further. Look at the total stake someone has. And that's where equity comes in, right? This term feels like it takes things up a level.
It absolutely does. Yeah, equity is it's a much more comprehensive financial concept. It's fundamental. It stands for the total value of ownership an investor holds in a company. So eventually, you take all their shares, you figure out the value, you sum it up. That's part of it. But here's the really critical piece, the differentiator. Equity is formally defined as the residual value of a company, meaning what's left after all its liabilities, all its debts, its obligations have been paid off. This is a core idea in accounting. It shows the true net worth that actually belongs to the owners.
Ah, okay. That residual value part. That's what makes equity so powerful then. It's like stripping away everything the company owes to others to see what's genuinely left for the people who own it. So it's not just about the share price bouncing around day to day. It's a deeper look at the company's actual financial foundation.
Precisely. It's the real, tangible value remaining for owners once every obligation is theoretically settled. And that makes equity a much more robust, sort of solid measure of ownership compared to just counting shares or talking vaguely about stock. Think about it. A company could have a really high share price, maybe because of market hype, right? Speculation. But if it's also drowning in debt, if its liabilities are huge, then its equity, the actual net worth belonging to owners, might be surprisingly low, could even be negative in some cases. Understanding that is vital, especially for assessing, real financial stability, particularly when markets get rocky. It lets you see past just the surface excitement of a rising share price. It's the number analysts often dig into to understand solvency, long-term health. It gives you that clean picture. Assets minus debts.
Wow. That point about a high share price not always meaning strong equity, that's really insightful. That changes how you might evaluate a company. Okay, so let me try and summarize the relationship then. A share is one specific unit, measurable. Stock can be those units, singular or plural, maybe across companies, more general. And equity, that's the big one. The total ownership stake and value, specifically considering the company's debts, the net position.
You've got it. That's the hierarchy,
Yeah.
essentially, from unit to collection to total net value.